Hello and welcome to today's analysis for the Ftse and Dax on the 18th of the 5th, 2023. It's a Thursday and today we're going to have a quick look at the weekly chart, which is a bit more of an overview of where price is at the moment. We've had a few down weeks and it's sort of been turning, had a bit more strength and then not so much strength last week. And we're not moving down just yet this week. So potentially we could start to see a bit more pushing upwards in targeting the upper Bollinger Band at some point in the future. We did earlier this year in February reach all-time highs of around 8,050 points, or 8,050 was the price. Had a sharp drop and we've kind of retraced back up and we're making our way up. We're not too far from the all-time highs at the moment, so about 300 points, which isn't a huge amount. It could be, a couple of candles away. What I would expect from this is that there isn't as much strength in the selling, so there's not really too much to expect. We might see a bit of pushing up. There's not really any sort of theme that points to a particular direction on the Ftse. We'll take a quick look at the Dax now on a bigger time frame. Actually, first we'll check out the daily. We've touched the bottom Bollinger Band earlier this month, which could mean that we're going to see a bit of pushing up at some point to try and get to the other side before we make our way back down. So for the Dax, we've kind of reached the all-time highs here and we're sitting at a very high level. Ideal situation is that we do come up and touch the upper Bollinger Band. As we've seen back in March this year, we touched the upper Bollinger Band and then we sort of saw quite a good decline for some time, and then we've come back up to reach those all-time highs now. So ideal situation is we do push higher, touch the Bollinger Band before we start to really see some selling coming in. So that's on a daily chart. Let's have a quick look at the weekly. Yeah, we're kind of topping out here. There's nothing really pushing it higher just at the moment. We've been in this sort of similar range for about a month. So it's just being patient, waiting for the right setups, and at some point we're gonna push out in a particular direction. So anyway, let's have a quick recap of the Dax from yesterday. Here we are for yesterday. Very similar situation to what happened the previous day. So we pushed off the low here to the closing gap and beyond up to the opposing sort of triple bands. Very similar action yesterday. So we touched the low, pushed up to these higher bands and through the gap. There's a good 90 points in that move. I didn't get in. I had my entry a little lower again, so I've done the same thing. I didn't necessarily want to get in too early because it brings your stop up closer. So if I get in too early, that could be an extra sort of 20 odd points that I need to, my stop might only be, say, there, as opposed to here, which gives me a lot more breathing space if the market does push beyond that expectation. So it's just a safety feature for myself. I didn't really want to risk that kind of a setup, especially if it only went to the close gap and then drifted down. For manual traders, you could have seen the price action pulling away from that low, and people might have got in on a manual trading basis, but I put my orders in and I walk away. I wasn't too keen, as you might see. There could have been a bit of a sell for around 30 points before the market drifted upwards up to that R2 level. I didn't have any sell orders in except for the R3 because, as I mentioned yesterday, there wasn't enough conviction to get short around this confluence here. I felt as though the market could push beyond that, and then the previous high, it wasn't quite in line with the other day. So I didn't really like the feel of getting short, so I didn't get short, and no trades on the Dax. Let's have a recap of the Ftse. Similar situation, so we kind of went up towards the close gap, touched it and kind of just drifted in between these levels. So again, for me, nothing. People could have got long on a buy stop type of an order, but the risk reward wasn't really there, in my opinion. So no trades on the FTSE, no trades on the DAX. Let's have a look at today's trading. Ideal situation would be a really strong push, as always, into either the R2 or the R3. A push outside of the Bollinger Bands quite quickly in the first, say, 5 minutes. That would be an ideal kind of a situation to look for shorts, to then bring the market back down to either the extreme gap, this high at 15,993, or the close. Or even we have been seeing the other side of these sort of bands getting hit quite a bit, so the S1. So your targeting is sometimes the trickiest part of trading. If you're looking for a bit of a safe option and we get in up here, that could be, that's plenty of points in it, so 140 odd points. If you're getting in from the R2, you're still looking at about 60 odd points at that extreme gap. But if you want to go for a bigger target, it's either the close or the breakout short as an alternate target. So we're hoping for pushes up. What is more likely to happen is that we're going to drift down, perhaps touch this high, push up again, and then perhaps drift down to these lows here. For me, not really worth getting into a trade. You could do a sell stop targeting the close gap, but there's every chance it'll touch it and just drift up. So not really worthwhile getting into any trades around these sort of levels. Again, if we see that push up, hit the R3, pull it back down because we've got a bit of motion in there to take advantage of. Or if we do make it all the way down to these lows that we've been touching, around the 15,869 kind of a mark, we've seen it here, 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 and yesterday as well. If we kind of touch this low, we might even just tap this and then bring it back up to the close gap. But ideal situation is we do push through that a little bit, touch the low, and then bring it back up for a buy up towards the close. Unfortunately, if we do push below these levels here, so below the low, we don't have much support beyond that over the last few days. So there's no telling how far that might go. It could really plummet if it breaks past this point. So just something to be aware of. Don't try and catch the falling knife because that support is quite strong. If it does break it, there could be some really strong selling in the market, and you probably don't want to be a part of the buy side when that happens. Over to the FTSE now. Potential trade setup as a sell stop heading down towards the close gap. There's only about 20 points in it, and you'd really want it to not push up beyond the high by too much. The risk reward for a sell stop to the close gap isn't overly ideal. I'm expecting the market to perhaps sort of maybe spike up a little bit, hit the high, and kind of drift down for the day, maybe getting down to this breakout short level and kind of drifting back up a little bit. There's not too much strength in the market, as we can see. The market's kind of drifting downwards. Nothing really here to say it's going to prop up. The real trade I'd be looking for is a really strong move up to the R3. We've got this level here, which has been tested once. We've got the strength of the R3, which is an extreme kind of a level. And we'd want to see a really strong push outside of the Bollinger Bands into this level. I'm not a huge fan of the R2 here, but we have had some volume in this price range, which could help it bounce off of the bottom of these sort of structures here. But not my favorite kind of a setup. I probably wouldn't risk it for today. The conviction here isn't all that strong. My ideal setup is the R3 for a sell, targeting either the extreme, the high, there's about 30 points in that, or perhaps even the close gap, which is about 68 points away. Not too much else setting up. There's not really anything that stands out to me from this kind of price structure, the cam layout that we've got. We really need some extreme motion in the market so the price action can more be the bigger indicator for us rather than the levels and the layout and the structure that we're looking at. So unfortunately, it's all about understanding how the price action works, what rejections look like, and that sort of thing in the live market, which unfortunately can't really be predetermined and put in a pre-market analysis video, because you need to see that spike before you can determine whether that's where it's going to start slowing down. You start seeing the orders pulling away and the price dropping away from the levels that you're looking at. That's it from me today, guys. Thank you again for coming and watching. Good luck trading.